is a question that came through. So Aaron asked, if I currently have a mortgage, do you still need to get pre-approved for another one?
Yeah, so if you have a mortgage right now, you always need to get pre-approved to buy a new house. So this is a new loan, it's a new scenario, everything's new versus when you bought your house and you took out the mortgage you currently own. It's going to be a brand new mortgage. So that's why I'm saying we need to go through all of these things, the CIA, the credit income assets, because we're incorporating the mortgage you already have into another mortgage, and we're adding everything up, and that all is going to impact your debt to income ratios. So that's why it's very important to go through the pre-approval process, which, by the way, we don't need to run a hard inquiry on your credit. Some people are worried about that, although if you do have perfect credit or close to, inquiries don't impact it, just to let you know. And it's free. It takes us some time, but I'd rather put in the time now and give you all of your options rather than you just kind of guessing that you're going to be okay or not okay. And worse yet, you're thinking you're not going to be okay, right? And then you don't move forward, and you miss the boat, or a house that would have been perfect for you went on the market, it's sold. You easily could have gotten in there and won it, but you didn't move fast enough. So again, if everybody's on this call, I'm imagining that everyone at some point is thinking of selling or buying. 100% need to get pre-approved. That's the only thing I would recommend at this stage of the game, because everyone's situation is different. Everybody has different contingencies or other things going on, and we want to just lay out your options and you choose what is the most appropriate and the best for you and the family. It's not, don't Google things, or these online lenders, all they do is just run the credit. They say, what's your income? And then they say, yeah, you're pre-approved. That doesn't help you become the strongest buyer possible. That doesn't help you choose all these other options that you might have. So go ahead. What else, Kara?
I think that's good. I lied. It's not the exact next slide. It's the one after that. We go through the whole process. There's a whole slide on process, and we talk about the appraisal at that point. So I won't keep you for that. But I mean, I think really that covered it, because really the issue is, the most common issue is, I want to sell, I want to pull the equity out, but I'm going to be contingent. So what do I do? How do I be competitive?
And by the way, something else I want to throw out there for everyone. Yeah, you might be contingent, but what are the options to become non-contingent? So assets are a whole other thing. You know how much money you guys have. You could borrow against the 401k and pay yourself back. You could take out an equity line. You can get a gift from family. I mean, there's so many ways of solving the asset issue in order to have enough money to put down and make an offer. For income, for your debt to income ratio, if you're doing that math in your head and you're going, man, I'm adding up all my monthly expenses, which again, we're not talking utility bills. We're not talking about, anything that's not on your credit. It's only things that are on your credit: minimum payments on a credit card, car payment, and then your mortgage with taxes and insurance. That's what goes into it. So if you're doing the math and thinking, man, my debt ratio is going to be tight, then maybe we talk about paying off some things. We maybe pay off some accounts. If you have an installment loan that's $300 a month and you only owe $2,000 left on it, if we pay that off, for every $50 a month, that's $10,000 in buying power. $50 a month, $10,000. So that $300 payment is $60,000 of buying power that if you pay that off, now you gain. So there's ways of us still making you non-contingent just by getting a little creative. So that's why I'll always go back to it. Feel free to reach out anytime. My team will put all the time we need or you need into making sure that you're the strongest buyer possible and you have all these options in front of
you. One other question that came in: equity line of credit, is this not a debt? Doesn't this have a negative impact?
So the way lines of credit work is, First Colonial Bank, for example, great bank that we refer. Again, we have no relationship with them. It's just over the years, we pick out banks that we feel like do a great job. So they'll lend up to 90% of your value. And a lot of times that value they can figure out with an automated way of doing it. They don't even have to send somebody out. But let's say it's $200,000 your house is worth. So that's $180,000 they would potentially give you as a line of credit. But you have a first mortgage, right? And let's say you owe $150,000. Well, that leaves you with $30,000. $180,000 they'll give you minus your first mortgage is $150,000. I'm hoping I'm not losing anybody. So that leaves you with a $30,000 line of credit. It doesn't matter if it's 30, 100, 200, as long as you're not borrowing against it, it's not a debt. It's just like your credit card limit. You have a $10,000 limit on your credit card, but if you never use that credit card, do you have to make a payment? No, of course not. It's not a debt yet. It's just a line of credit extended to you to use in the future. So I've had plenty of people use these lines, again, in order to put more of a down payment, in order to cover closing costs on the new purchase. At that point, we will count whatever you're borrowing, and we'll take a payment on that and count it as debt. So yes, if you're using it to buy your new house, the payment, there are mandatory withdrawals required for most of the. Nope, no mandatory withdrawals. You can take $100,000 and never borrow against it. They don't care. You just have it in case you need it. I have a line of credit in my house. I've never touched it. I've never paid a dime for it. So that's one of the ways you can use it, guys. And I know depending on your situation, we can really dig into it with a lot of detail, but I'm just trying to give you a sense that I understand the frustration where as a seller, you're sitting in the driver's seat. You're like, wow, I'm sitting on all this money. But then the next step, and this is what Kara and I always talk about, to become a buyer, it's just so tricky. Now, the last thing I'm going to tell you guys, and I'm sure Kara will as well, real estate is not a highly corporate structured industry. It's very much who you know. Real estate is very local, and it's very driven by a select few people. It's a 90-10 rule, I always say in real estate. You have 10% of the real estate agents doing 90% of the business. So Kara will see the same listing agents again and again and again when she's putting in offers. And if Kara was a big jerk and trying to push these agents around, and she's terrible to work with, and or maybe she just doesn't know what she's doing and she's causing more problems than solutions during the process, what do you think is going to happen the next time that listing agent sees Kara's name come across their email with an offer? They could have the strongest buyer in the world, but it doesn't matter because they don't want to work with that agent, that buyer's agent. So I was thinking about what did I want to tell everyone today. I'm just trying to give real advice. That's the real advice. It's really who you know. So I try personally, again, 20 years of doing this. I live local. I live in Medford, grew up in Mount Laurel, lived in Marlton. My office is in Cherry Hill. And most of the time, we know the listing agent. Most of the time, we even handle all of their buyers. They refer their buyers to us. So if you're putting in an offer, and this person I just talked about that was competing against 40 other offers, well, guess what? That agent that had the listing has become a good friend of mine, a colleague of mine. And all she needed to know was we were offering around where everyone else was, but because we knew her, and I know it doesn't seem fair, but that's just when you have this much activity and this much demand, these listing agents, how are they going to differentiate all these people? They have to narrow it down by who they know, who they trust, and who makes them more comfortable. And then in turn, that makes the seller comfortable. So anybody that wants to work with Kara, you're automatically getting somebody that, for the most part, I think everybody likes. She's okay, pretty well known, and she hasn't upset too many people. Yeah. And me on the other, and I've been trying to do the same thing. I don't want to be a big jerk, and I bite my tongue quite often because I know in the future we're going to put an offer in, and I'm going to need to pull a favor from that same agent.
Right. Yep, it'll come back to you.
It'll come back to you. Anything else you wanted me to go over, Kara?
No, I think that's it. I appreciate it. Thank you so much for your time and all the info. It was awesome.